Thanks again for coming. These are very loud. What is Agentic Group, right? So what do we do? Why are we here? We are a global consortium of over 35 blockchain and digital currency related companies. Our goal is threefold. That is to explore the space with clients, such as the country of Luxembourg or the Rotterdam port, etc., the island of Bermuda, to educate people about what's going on in this space, especially business people and finance folks and mom and pop, everyone, and so that we can begin to understand the realities of what's possible, what's silly, and what will happen 10 or 20 years from now. And then we execute, and which goes right to our consulting, and then later development services and investment services in this space. So we work closely with our member companies and bring them along to very interesting projects around the world. There are people on our board, such as Matt Mellon of BNY Mellon family, Evercore Partners, MIT Media Lab, and others that also chip in their intellect and their time to help us sort out what the realities are in this space. So the reason why we're here today really is not just though to introduce ourselves, but there's a stunning opportunity happening in the world right now. I think the most important thing about blockchain and Bitcoin and all of these assets that are coming out of this movement is a couple of things. One is the idea of distributed consensus-based value creation. What does that mean? It means what the internet did for email, allowing people to talk to each other, or messaging, like allowing people to instantaneously talk to each other or instantaneously send each other money now without banks, without states. That's a really important concept. And the idea to be able to create something like Bitcoin, which is now over $700 per Bitcoin, again moving up, that means that people got together from different parts of the world and decided we're going to make something valuable. That's a really important concept. It has never been done before on Earth, not as fast as it's done. The banking system that's been in place since the Knights Templar, essentially, is changing. It's evolving. The big brands won't necessarily go away, but they will change. They're forced to change from the outside pressure of this consensus-based value. So as we look at the Internet of Value, that's what we call it, because it is actually imbuing value into processes and platforms that didn't even exist 6 months ago. It is changing how we think about the unbanked, how we think about microfinance and microlending, how we think about all these lofty ideals that we always had but never had the technology to actually do. Now we have the technology. So what do we do with it? Somebody who I consider very smart yesterday said to me, now that we have the technology, if we don't change everything, it's our fault. And he'd be right. It would be our fault. Because now we have the tools to actually have a woman on the roadside in Chile selling plantains or bananas could micro-lend a currency to a farmer in sub-Saharan Africa. That farmer in sub-Saharan Africa, with his smartphone, can then invest in a bond of securitized assets, made of securitized assets in the Rotterdam port. So it's truly the democratization of value that we're talking about. That's the other big idea. That everybody, once these smartphones become a sub $5 commodity, every poor person in the world will have a smartphone and a digital wallet. That's access unprecedented as far as humanity as we know it. No one's ever been that readily available to receive and to then spend things of value. So we're here to talk about what this means, particularly for France right now, and the EU, but in light of the African opportunity both for Africa and for the EU simultaneously. There is no one without the other in this movement. And we can talk about America and other continents and countries later. Right now we're here to talk about this. So on my left, I know 3 of these guys really well. I just met Richard today, but he's a pretty smart guy, and I know him by reputation. First, we're going to go with Luis in the end. Luis Molina. Luis is the founder and CEO of Firechat. Firechat is a platform that actually looks at connecting the people who drive this value, and he'll say a few words about that in a second. Next, we have Richard. Richard, just, you're the one I don't know. Just pronounce your last name for me, because
Caetano.
Caetano, thank you. Richard Caetano is the co-founder and CEO of Stratum, which is a private blockchain developer here in Paris, right? Okay. Now, this young man, other young man here I met a long time ago, Jonathan Chester, is the founder and CEO of Bitwage, which actually transmits wages from a corporation into Bitcoin from hard-to-access economies, or economies, pardon me, that are hard to get money out of or get money into. Jonathan actually transmits that cash and those wages into Bitcoin and then into other currencies, as he'll talk about. And then, last but not least, we have my buddy, who I've been with way too often the past few days. But Micha, and again, I have to ask you to pronounce your last name, because I never do pronounce it correctly. Benoliel. Benoliel. I would have said something completely different. I think I always do, so I have to ask him now. Micha is the founder and CEO of Firechat. Firechat's a messaging app that more than likely will soon transmit money, but that's beside the point. That became very useful in the Hong Kong protests that happened just a couple of years ago, and I think showed the power of instantaneous communication and the value of that both in a physical sense and now in a monetary sense. So with that, I will introduce Christophe de Courson. Christophe is the director and the co-founder of Agentic France. He and I have done business together as well, and we thought that this was a great opportunity to help France sort of get in the game with us in this and understand how this movement is going to benefit them, both internally and as France reaches out to other markets, such as Africa today. Chris.
Thanks, Rick. Ouais, t'es un peu grand quand même. Bon. Bon, bah merci d'être venu. Hein. Bon, on n'a pas fait full house, mais on préfère les gens de qualité plutôt que simplement d'avoir des gens. Bon, je vais pas réexpliquer ce que fait Agentic. L'idée, c'était surtout de vous exprimer pourquoi on essaie de le créer en France et pourquoi on le crée. Et cette conférence marque justement la création de cette société et cette filiale. Ça faisait longtemps avec Rick qu'on réfléchissait à comment créer une structure similaire ensemble en Europe. Et on a accéléré, ça a accéléré un petit peu dans ma tronche quand j'ai appris que Agentic Group travaillait avec le gouvernement du Luxembourg, qui est un pays européen, pour du conseil. Et donc j'ai trouvé ça un peu... Alors j'ai trouvé ça très bien pour Rick, mais j'ai trouvé ça moins bien pour nous, dans la mesure où je pense que sur un continent de 500 millions de personnes, on doit avoir les talents et les structures pour pouvoir répondre aux questions des gouvernements européens, et surtout sur un sujet aussi sensible qui concerne la digitalisation des finances publiques du pays. Et donc c'est la raison pour laquelle on a accéléré. Donc on a fait ça un peu très rapidement d'ailleurs, parce que ça fait que 3 mois qu'on est dessus. Donc ça n'a pas été simple. Et puis Agentic Group n'est pas une marque d'ailleurs qui est connue en Europe. Mais en revanche, énormément des clients d'Agentic se trouvent en Europe, et ça continuera, et pour cause, dans la mesure où cette technologie, si on parle que de blockchain ou des technologies émergentes, sont beaucoup plus présentes aux États-Unis et en Asie, mais là en l'occurrence c'est les États-Unis, qu'on peut l'être aujourd'hui ici, bien qu'il y ait beaucoup d'initiatives qui soient faites. Donc voilà, bon, après, l'idée du panel, c'est donc marquer la création de la filiale française, mais également d'essayer de faire ce qu'on a l'habitude de faire à New York comme panel tous les à peu près mois et demi, 2 mois, C'est-à-dire prendre des gens de qualité, en théorie, et qui vont échanger sur des sujets, sur les nouvelles technologies, plus particulièrement blockchain, parce que c'est vraiment le sujet, mais les technologies émergentes. Et l'idée, c'est pas forcément de mettre que des gens spécialistes d'un domaine, mais au contraire de pouvoir confronter deux mondes et que l'audience puisse se faire sa propre opinion et qu'il n'y ait pas un parti pris d'une technologie ou d'une autre. Voilà, c'est à peu près tout. Je pense que les échanges ce soir vont être assez intéressants, compte tenu de la nationalité et des positions géographiques de chacun et de leur société. Et donc on aura une vision à peu près globale, même si on n'a pas d'asiatique, mais on aura une vision à peu près globale du marché. Voilà. Alors j'avais prévu de vous introduire également Jean-Louis Borloo, qui devait venir expliquer sa fondation pour l'Afrique. Il va venir, sauf que donc je ne vais pas l'introduire tout de suite, mais peut-être qu'on sera obligé de casser un peu le panel compte tenu de son emploi du temps. Il m'a dit 18h, donc bon, c'est incessamment sous peu. Donc soyez pas étonnés si je demande qu'on bloque, enfin qu'on arrête un quart d'heure la conversation en cours. Voilà, c'est tout. You can start. It's fine, thanks. And bon, bah, j'espère que vous allez apprécier ce premier événement. Merci, bonne soirée.
That sounded really beautiful.
Yeah, it was.
I only understood.
like
I
it?
only understood half of it, but it sounded really beautiful. In all actuality, I do understand most of it, so it's good. Why don't we start by having actually our panelists, in their own words, tell you a bit about who they are and what they do, just for a couple of minutes each. Do you want to start, Micha?
Yeah, sure. So I'm an entrepreneur based in San Francisco, California, and I created this company 5 years ago called Open Garden, where we built a new generation of network that basically connects smartphones directly to one another to recreate a network powered by people on their smartphones. So what does that mean? It means that people with the smartphone and this application can actually exchange information and data when they are in proximity, even if you don't have access to a carrier network or to a regular Wi-Fi network. So we developed the technology for 2 years, and it got famous when we started to use the technology for a messaging app called Firechat. And Firechat uses the same concept and technology to exchange messages. So what it creates, it's a network that's powered by people and by communities. That means that communities and people can now, with this kind of technology, create their own network, which is completely resilient and makes it a perfect way for sharing information and content. And in the case of messaging, because it's very tiny number of bytes, it was pretty easy, and that's why it spread out. It spread out like fire. It was built for. In California, in the desert of Nevada in the US, you have a festival called Burning Man every year. So we built this application for Burning Man, and because you are in the middle of the desert and there is no access to any network, and so it got used at Burning Man. But before that, we realized it has also other applications, and mainly when the government tried to shut down access to the internet, or when users don't have access to the internet, like in disaster or recovery situations, they also use this app to communicate. And it got famous, like Rick mentioned, in 2014, when 500,000 people in the city of Hong Kong installed the app in 7 days to share information and remain connected. So it's related to Bitcoin and blockchain because it's a distributed completely network, and from the very beginning, the Bitcoin community also approached us to use this network for exchanging payments, for example, and transactions.
Excellent, thank you. Jonathan, you want to tell us about what you do? Bitwage?
Sure. Yeah. So I guess I do two different things. One is that I am a contributor on Forbes for all things Bitcoin blockchain. So I've met and talked with through just my due diligence for the articles that I write with a lot of the people that you hear about or maybe have watched videos on. So I have gotten a lot of understanding of the Ethereum blockchain and private blockchains, permissioned blockchains, whatever you want to call them. And I know a lot there. But on the other side, I am, I guess, one of the founders of a company called Bitwage, and we are an international wage payment and business disbursement company. We have over 5,000 users, have done $5 million in wage payments. The idea is that when a process, for instance, when you pay someone in Brazil, it might take between 5 and 15 days for that to happen, can cost up to 8%. And by using the blockchain, and we use the Bitcoin blockchain, you are able to bring those costs down to a next day process with real-time settlement in people's bank accounts with costs as low as 1%. And this is done through a local currency to local currency transfer. We also have good relationship with regulators. We're part of a group called the Blockchain Alliance that works and talks directly with several large U.S. enforcement agencies like the FBI and the Secret Service. We're also part of a working group that is speaking with the European Parliament and the European Commission, helping to work with the new regulations that are going to be coming out, which likely include opening up the AML D4 for working with Bitcoin and blockchain exchanges and wallet providers. So, yeah.
Okay, great. Richard.
Hello, everyone. So my name is Richard Caetano. I'm from California, but live here in Paris. I first got involved with Bitcoin in 2011 and was blown away by the white paper and the technology. And so I ended up spending my life dedicated to the technology since then. And last year launched a company here in Paris called Stratum. And the work that we do is focused on securing the business process or the workflow. And so a year ago, we asked a question: what if we bring the blockchain into the middle of the business workflow? What can that bring? What kind of benefits can it bring? And what we found is when you have multiple partners working together on a workflow, many of the times, the information is siloed, and there's a lot of asymmetric information, and there's a lot of other types of privacy and security issues involved. And so there's a lot of third parties that are introduced to help with the system. And we found some interesting things that we can do with the blockchain, but even setting the blockchain aside, we focus on building what we call proof systems. And proof systems is where we can build these trusted workflows that the partners in the workflow can trust, and that brings everyone from a hierarchical kind of perspective to a more peer-to-base perspective. And so for us, we're focused on working with the regulators and working with banks and different institutions, as well as working with blockchains and individuals. So it's been an interesting ride so far. We've been moving pretty quickly. Today we're a team of 9, and we have seven technical guys with 3 guys focused on research. And this year, 2016, we're exploring this technology with different partners and building POCs, proof of concepts, to demonstrate the potential. So thank you. Thank you for having me.
Thanks, Richard. Thanks for being here. Luis, do you want to chime in?
Yes, thank you. Hello, everyone. My name is Luis Molina. I'm coming from Budapest. I started my career 20 years ago designing mission-critical systems for the banking industry. And then I turned into entrepreneurship with a very high technical profile. And I started a project called Firechat 2 years ago. What we are doing is a concept that we call the Internet of People. Basically, I saw the born of the web 20 years ago and how a whole world was created out of the web. No? And 10 years later, Steve Jobs invented this application framework for smartphone, and by doing so, he created a whole new space there that also evolved into a huge world of application and possible stuff there. When you interconnect mobile phones between each other in order for applications running on mobile phones to freely communicate without relying on the web, then you create, again, a new space. And it is a new space because it has its own set of properties. As it doesn't depend on web servers or web IPAs, then you have the possibility of disintermediation, something very similar that happens with Bitcoin, that doesn't need to run the Bitcoin system it's a type of database that doesn't need to run on a company web server. But in this case, this new space allows applications, any type of application in any industry, to communicate between each other from my phone to your phone to his phone at an application level without going through the web. So when you don't need to go to the web, you have the following thing. On social application, you have more private, much more privacy, because all the information is stored at end user devices. And when you port business models from the web to the mobile peer-to-peer world, this new space, then you have the possibility to create for every type of use cases a peer-to-peer transaction. And I'm talking about, for example, Uber without Uber, Airbnb without Airbnb, e-commerce without eBay. And by doing so, you produce a really very powerful incentive for people to migrate from the web to a peer-to-peer mobile world and start using all this possibility that this new space creates. So it's a world of opportunity, because I compare it many times with Columbus coming from America and saying, look, I found a lot of land there, so you just have to bring a boat and go. And well, that's what we call the Internet of People. It's related to cryptocurrency because it's run through a peer-to-peer network that relies in micropayments and technologies that are enabled by cryptocurrency. And at the same time, it holds a digital asset, a cryptocurrency platform, so that all these business transactions can also be, when they need to pay to each other, they can use crypto network as a money transport network, value transport network.
Okay, so the first thing for our audience, don't ever use the word cryptocurrency. Crypto is a negative, so don't ever say cryptocurrency, even though by nature it is, cryptology that drives the Bitcoin. And I think that that's something we've gotten away from, because the words that we use are very important in how we introduce these technologies to the mainstream. But actually, Luis, I want to stick with you for a minute because you were on a roll, and answer something for maybe half the people in the audience. What is a blockchain?
Well, you know that 30 years ago, you are a technician also, we had files, okay? Files and programs that write into files. That evolved later into databases. A database is an optimization in the access of data, okay? And databases continue evolving through time, and they also reached the point that there were distributed databases. In case your data center got on fire, then you have something distributed somewhere else, and that was cool. So a blockchain is a technology that started on one side, not as an evolution of this, I would say, is in the very most basic form is also a file and a program that manages that file, okay? But it has some properties that distinguish a blockchain from a regular database that they don't need to run on a company's servers. Okay, and that is one of the most important things, because that's the property that later produces disintermediation. The other one is that it doesn't require an administrator to give permission for people to use that system. And the third important property of blockchains is that the information that is stored there tends to be permanent and nobody can delete it. And that is something that never existed before. In all type of databases, even in banks or central banks or whatever, or even not financial use cases, any database, there was always at least one person who was able to change the information. So that's the third property that this kind of technology brings.
Mm-hmm. So thank you for that. And
I just want
go
to
on.
add,
Sure.
I think for everyone to understand well what it means. If you look at the internet 25 years ago, and how it disrupted the content, media, and communication industry, what happens with blockchain is the same disruption that's going to happen in the sector of the bank and the insurance. And I think it's the same kind of disruption that we're going to live in and experience in the coming 10 to 20 years.
Mm-hmm. Well, that gets sort of back to peer-to-peer. So
I wouldn't say only banks, because banks is just the beginning, is the tip of the iceberg. Because this property, there's nothing that prevents a blockchain to store some information besides financial transactions. And if you store other type of information, you still have the properties that it creates and a history that cannot be changed.
Sure.
So it spans several years.
I agree. I said
Yeah.
bank, insurance, and
Yes, and all the rest later when people start discovering all this stuff. Yeah.
Title insurance, real estate, supply chain dynamics. There are actually lots of different places that we talk about a lot with our clients, where blockchains do work and some places, quite frankly, where they don't. But there was a thread in all of these towards peer-to-peer networks or person-to-person transactions. And Richard, why don't you tell us why that's important and why a peer-to-peer network, or the Internet of People, as Luis calls it, is more important than, say, an Internet of Banks or an Internet of Money?
Yeah, so I think if you were to deconstruct the layers that we're looking at here, we can find some parallels to how the internet's actually created, right? You have different layers in the internet which consist of the physical wires and then like all of the routers and how you route these packets, and then you work all the way up to your web browser, for example. And so there are many layers in all of this that are quite technical, but to just simplify, we can just sum them up. Basically physical and like routing and maybe some like application state stuff. And then what we find is based on these technologies, we can start building upwards from that. And so the next layer that we're looking at, we can kind of generalize it as an economic layer on top of the internet. So we have these physical and then these routing, and then we have like these applications that run. And then now that we have this technology, the blockchain and some other peer-to-peer crypto technology, we can now assemble like this economic layer. And these layers can consist of, say, the first one being a trust layer, right? So now that you say we can write some information to this global database. We have a global timestamp server. So now we can say this transaction came in first and not this one. Okay, so now we have a way of establishing trust. All right, so from that we can continue moving up. Now we have another layer for value. Once we have trust, then we can exchange value between each other. And that naturally leads to another layer called ownership, right? So we can continue working up. And I think when we start looking at this, at the internet from this perspective with all these new protocols, we can start making things more programmable, more automated. And then that's when we can start seeing the ramifications in the world, right? All the intermediaries, the third parties, a lot of these services that are manually done can be simply automated. So I think that's where the big game changers lies.
And so we're going to get into those regulations in a second, how say, France or the EU itself is going to interface with the rest of the world. But that's a regulatory issue as well. So what have you learned about that?
Me? Continue?
No,
yeah.
No, sorry. Yes,
Oh,
I was
sure.
speaking with Jonathan.
Okay.
Jonathan, what do you think about that?
Well, so there's a very interesting aspect to regulation when it comes to blockchain. One thing that has scared a lot of people in blockchain, I'm going to just be upfront, right? There's the blockchain, which is the one that was the original one, the one that was formed with Bitcoin, right? It's open, it's transnational, it enables essentially permissionless innovation when it comes to finance, right? People are able to create a lot of new technologies when previously there were barriers to entry. And of course, with permissionlessness, there's also lack of control. And that creates a lot of fear in people. And I think what ended up happening is that there were a bunch of really smart, terrified people that got together and they said, there are a lot of interesting attributes of the blockchain. Maybe we can create a version of that that's controlled. And what you've seen is the creation of these things called permissioned or private blockchains, where you can exert a level of control over the system. But there is something to be said about whether or not these systems can actually achieve asset settlement. A lot of people like this idea with blockchains where you tokenize an asset, and by tokenizing it, you can instantly settle that asset anywhere in the world. And technologically, like the technical capability is there. But I like to always bring this to a use case to try and get people to understand why it's not necessarily the case. In the US, we have pink slips for cars, right? And this pink slip represents the ownership of the car. But one of the ideas that people have is, well, why don't you tokenize the pink slip? Then you have less paperwork with the DMV, and everyone will be able to see when the car was sold. It'll create a lot of efficiencies in terms of moving the asset of this car or its ownership and its proof of ownership. But the issue comes to when I send you the token, but I still have this piece of paper, this pink slip that says that I own it. And I go to a judge and I say, this guy stole my car. And he says, no, I have the token. And I say, no, I've got the pink slip of paper. well, who owns the car in this situation? And I can't really say who does, but really the answer is that it's a legal argument. And because of that, it is a political argument that goes beyond technical capabilities. I'm not saying that it's not possible. You might be able to get Paris, the Paris regulators to say this token represents ownership. You might be able to get France. You might be able to get the European Union. But now, if I'm sending this token of a car to someone in Japan, to someone in China, to someone in the U.S. or Brazil, how is this working? How does this become cohesive? Right? You need international political cooperation to achieve something like this. And I'm not saying that it's impossible, but it's one of those things that you'd be looking at in 10 to 20 years down the line, and not today.
Well, Jonathan, let me ask you. I'm sorry to interrupt you. How did you get buy-in in emerging markets then?
Sure. So one of the big differences is that when we're working with the Bitcoin blockchain, right, the token is not a representation of value, right? In the previous example, you have something that represents a pink slip, or a token that represents a car, right? It isn't actually the car, right? It isn't actually the value. So there's regulation governing that. But with the Bitcoin blockchain, the token is actually Bitcoin, which is value. It's not representation of value. And as such, when I send the value, not the representation of value, from the US or from Europe to South Africa, we have instantly settled value over the internet, and nearly for free. And because of this, it means that this system of permissionless innovation is able to achieve true asset settlement before, while working with the regulators, but before regulation is actually put in place.
But isn't it true that not every jurisdiction sees Bitcoin the same way? It's a store of value in some places. It's a currency in Japan. It's a unit of value in other places. I mean, if we were looking at emerging markets, what is the most important takeaway for, let's say, France or the EU in general, when looking at emerging markets, and what kind of legislation is addressing those specific issues?
So I think that one thing that we've talked about actually with the European Working Group when it comes to working in Europe is actually having a unified system for dealing with money laundering, right? Because that's really the biggest concern when it comes to this. And each country has their own different regulations on money laundering and how you essentially present suspicious transactions. And as a result, it creates a lot of overhead for companies that are coming into the space. And what ends up being a more efficient way of doing this is having a European level of essentially understanding, these are the people that I need to send the suspicious transaction reports to. Because when you do it on these micro levels, what ends up happening is you end up having to get a different workforce for every single country, because not one person understands the language. And this is very technical work that needs to be done. So a unified front from a European perspective, just like how they have a unified front from getting payment licenses, right? E-money licenses, one license passports everywhere. It's a similar thing that will help companies be able to innovate within the European Union.
Which is great, but Micha has seen the other side of the coin, right? Micha has seen people take something that he built in a peer-to-peer environment and use it towards their own political ends, regardless of regulation, regardless of law. And I speak of Hong Kong specifically. I mean, what do you think about that? If people start moving value back and forth and say, we don't really need regulation, we actually have each other, what do you think the future looks like if that just takes hold, like Bitcoin did, essentially, and these assets become moving on their own volition, since you have experience in information moving on its own volition?
Well, I think you have two aspects when you come to disruptive technologies that enable information or value to be transferred that way. First, you have to look at how it can create wealth in places where it was very difficult to access either information, but also the exchange of value. And if you look at all the emerging markets, today what's great, you start to have more and more what we call mobile money or e-wallets in these countries, and people who were not able to actually be able to hold currencies or assets are now able to pay each other and to commerce. So if you make it more easier for people to actually make these transactions happen, so you can create wealth in places where before it was almost impossible or very difficult to achieve. And so that's fantastic I think for the global economy and for creating growth all over the globe in places where before you didn't have that growth. Then obviously because you make transactions or exchange of information easier, then you're going to have some situations where it's going to infringe on local laws and regulations. And I think that's our things that, it's inevitable. And with the time, we will have to adapt and to deal and to have to work also with the local authorities and the different governments.
See, I think a lot of this changes the conversation. I don't know, I think it was Luis said, just one sec, that technology is evolving, yes. But as technology evolves, as we all know, our conversations evolve. Television changed our conversation from one radio-based to one that was based in television and how we interact with that technology. And now the internet changed how we look at distributed information, and this wave is changing how we look at money. So my real question is actually what I'm trying to get at is this is happening in Africa, let's say right now. This day is primarily about Africa and its relationship with the EU and this new internet of value and internet of people and internet of money. At that level, what kind of changes can you see? I personally see banks becoming obviated. I think that not now, I think that within a decade, the World Bank and the IMF are in trouble in Africa. I think that they would have to defend their right to exist in many places because there is asset creation that's going to happen. That problem will be solved technologically, but mostly it's going to have to be a sociological shift and a psychological shift in how we think of value and how we think of money, which really strikes at the core of who we are as people, and that can strike at the core of who we are as a culture on both sides, and how those two work together in the future and sort of handshake themselves down this primrose path. And that's why I was asking you about Hong Kong, because it seemed to me really exciting, interesting, and a bit scary that a bunch of people just way beyond a Twitter flash mob, they just took this app to the streets and literally affected legislation level change. And that was, for Hong Kong, that's a big deal. For anywhere in China, that's a huge deal. So and I can see that happening in Africa, but with money being the underlying point.
Exactly, so that's what, this kind of networks was used in this circumstance by accident, I would say. It's not that we pushed in any way for that to happen, but if you have this kind of network, then in places like Africa, where often you don't have access to connectivity because it's too expensive or the networks are not there, then instead of moving information on that network, you can move payments, make transaction happen. And that's where it becomes very interesting.
And in Africa, you have to understand that there really is a very strong social network already in place. The way money gets to people in the farmlands from the cities is basically there's a trusted bus driver who's driving out there to this far-flung place. Someone hands that bus driver an envelope and says, "Give it to my Aunt Mimi," and the bus driver does. And the bus driver makes a small amount of money on that. That's a really strong social network. There's a lot of trust imbued in that network. So that being replicated through, I think, increasingly ubiquitous connectivity, increasingly connectivity that's there, except maybe the far out places.
But that's actually the way it works in some villages in Africa, where the bus have a server and the Wi-Fi equipment, and they collect emails from one place and then deliver it to another village. So
right. If anyone know about M-Pesa? You all know about M-Pesa, right? In Kenya. So M-Pesa essentially floats mobile minutes as a currency. That's what it really boils down to. That you can trade mobile minutes for all kinds of things in stores. Now, when you unleash the kind of power that these new digital assets can have in a barter, even in a barter situation, forget an extant currency, forget it being a currency itself, being a store of value of some kind that's relevant to local areas, then we see a certain shift and we see people start to build their own communities. And what might that mean? That might mean that maybe there's less immigration because being home is pretty cool. And people want to even go there now, right? So, I mean, there's all kinds of shifts going on. But Luis, you wanted to say something and I cut you off.
Yeah. Well, one of the interesting questions we can ask ourselves is why do we still have paper money? No? Why isn't money digital? I mean, every government would love to have money digital that is easy to issue, is less expensive. And the reason, I believe, is because of cash. Cash is difficult to digitalize, and it was impossible some years ago. Because if I want to have digital money in my phone, and money is information, then nothing prevents me as a programmer to hack the phone and to clone this information. You know that every digital information, like a picture, I take a picture now, I can send it to 100 people because it's digital. Okay, if I record audio, I can do the same. So if I had digital money and I can duplicate it, then it would defeat the purpose. So this innovation called the blockchain, when it was invented, what it did, in fact, was to solve the last problem, the last barrier that was preventing money from going digital. So right now, there is absolutely no technical barrier for governments to issue their money in a digital format, even if they wanted to do it with cash properties. Okay? So we only need one government, like the US or the European Union, to do it, and the rest of the countries are going to follow. And there are many people that already believe that paper money is going to disappear in the next 5 to 10 years. And once we get into that future, you are going to have people from all over the world holding on one side from their mobile phones, holding their money they want in the system, let's say in banks or whatever, but also there are digital money that might be national issue or like supranational money, like these words that I cannot say, cryptocurrency.
Yeah. Stop saying crypto.
They are going to have it in their own phone. So the people is going to start choosing, in places like Argentina that we have a big crisis every 10 years, I bet that almost nobody is going to choose Argentinian pesos, So they are going to switch with their finger to US dollars or francs or whatever is there, euros, So you should expect most of national currencies to disappear, in the middle term. And if you continue projecting, a lot of interesting stuff you will see in that future. So be prepared for a lot of changes just out of this invention.
Mm-hmm, mm-hmm. Absolutely, and especially since
I'd like to add some to that.
Sure.
I kind of have a slight counterpoint to add to the discussion. Whenever we think about the legacy system, which we have today, and we think about the disrupting technology that's coming, we should not stop there. We should also think about what is going to disrupt the disruptor, and we continue this line of processing. And to explain this, so we have bills and coins, and we have physical money, and then we have, let's just call it political electronic money. Let's say the euro, the dollar, which is controlled by a political body. And while most of us use SEPA and IBAN and ACH and these kinds of mechanisms to send money, we still hold coins because in the SEPA system, it's a closed system, and we're limited on how we can move this money. And to get around this money, we use coins. We use paper. We don't want to pay commission. We don't want to pay tax. We don't want to do these kinds of things, so we still use coins.
You use cash.
Yeah, we use cash. Yeah. So now when we go to a crypto, I'm going to use the word.
Okay,
I'm going to use the word. If we use the cryptocurrency, right?
Forbidden word.
What the cryptocurrency allows us to do is it's basically the same thing as SEPA. We have a fixed system. It's a deterministic system from which money can move, but the money is fixed in this system. It cannot come out of the system, and new money cannot come into the system. And we can see this very clearly with smart contracts. Smart contracts is a proof of what can happen in the future. We may not always want to do that. We may not always want to follow that future. We may want to go around things. And I think you're still going to have some kind of physical currencies, maybe not the dollar, maybe not the euro, but maybe gold, maybe silver, maybe something else that's precious to go around these systems.
Well, then, Richard, what would you say to a lot of the plans in place to put gold in Africa still in mines on blockchains?
Well, I think it goes back to the difference between what's a digital asset, like you explained about the crypto, the Bitcoin being worth something.
Hold on, I'm going to interrupt you. It's always the techies that keep saying crypto. If you ever hear someone in this industry say crypto, 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 they're a programmer. They don't have to talk to the people who have to listen to us, try to explain these things. And then they say crypto, and they say, yeah, but crypto is like a negative word. I said, yeah, but he's a programmer.
It's a positive
Don't even
word.
listen to him. Only listen to him when math is involved. But go on, okay.
Okay, so we have a digital asset like Bitcoin, right? And it is its own value. It is the value. It is the value. Like you have a Bitcoin, it does not represent value. It is value, right? And so the difference between a digital asset, and let's say we call them ledger assets, for no better word, but so a ledger asset is like a bearer token, right? It represents some kind of property, and we got sidetracked here for a second. What was the question again? I was thinking so much about cryptocurrency.
Okay, so just let's shift gears for a second.
Yeah.
And again, what I'm trying to get at is what is your take? What are your experiences actually in South America in dealing, not from a technical standpoint, but from how it affects socially? Because I think that's somewhat of a predictor of other emerging markets, not necessarily with lots of cultural differences, obviously, but from a process standpoint, what have you seen come out of what you've been doing in emerging markets?
Sure. So in the use case of Brazil, which is a big one for us, right? There are a couple issues that happen when sending money to Brazil. It takes maybe 15 days for funds to hit someone's account, and of course, you always run this risk of someone accidentally put in the wrong bank account number, the sender accidentally put in the wrong bank account number, and then in these 15 days, the money disappeared off of the sender's account, but it hasn't actually appeared on the receiver's account, and you're stressed out. Where is this money? And then if it ends up to the wrong place, you got to wait another 15 days for the funds to come, right? It's a month wait for your payment. It is not really a viable strategy to deal with. And so when you're looking at that and actually having the ability to not just have a real-time settlement from the U.S. Or Europe into Brazil, and then have a same-day or next-day transaction, it's actually quite astounding. Another use case is sending to the Philippines, where we had someone that needed to get money into their accounts fast. And in a situation where you need to get money somewhere fast, like in Africa, where if you had like your family that was waiting on remittance and they didn't have any money and they couldn't afford food, or like what's happening in Venezuela where people can't afford food, time is of the essence, and you're willing to almost spend an unlimited amount of money to make sure that your family in Africa has it. And so being able to reduce this time from a 5-day to a 15-day or to 15-day process to a next day or same-day process is huge. And what we were able to do in the Philippines is actually get money from a bank account in the U.S. to a bank account in the Philippines in under 2 hours, right? Incredibly fast, real-time asset settlement through the blockchain. So why does this happen? How does this happen? How can this happen? I like to think about this in high-level terms. You got a bank in South Africa and a bank in Argentina. Bank in South Africa wants to send $10,000 to the bank in Argentina. How does that happen? A long time ago, you put a bunch of gold on a ship, talking 1800s, right? Put gold on a ship, you sail it across the sea. Then when you get to the other side, you can see the gold, you can make sure that the gold is gold, and then you accept it, right? Then what we did, obviously, we have a much more efficient system. We have this thing called correspondent banking. But the issue is that both these banks have private ledgers. They don't share their ledgers with one another. And so there's a trust issue, right? I can't trust that you actually sent me $10,000 because I don't see your ledger. I don't even know that you had it to begin with. So how do you build that trust? Well, the correspondent accounts, essentially, where banks have accounts with each other, is meant to build that trust. But in order to do that, in order to have that, you have to have understanding of the local regulation on how trust is built in these countries. And so you end up getting these layers of banks that understand that, right? Either because they're local or they have capital. So you have this small bank in South Africa selling to a big bank in South Africa, selling to like BNP in France, then to the big bank in Argentina, and then to the small bank in Argentina. You've got all these intermediaries, all interwoven, all because of this lack of trust from a private ledger. But with the blockchain, right, it's an open ledger. Everyone can see every single transaction ever that happens onto it. You can bring it all the way back to any Bitcoin when it was created. And so as a result, when I say I sent you $10,000, I can send essentially an email with a link on it. And in that link, you press it and you can go to this public ledger and see and verify that $10,000 indeed was sent to you. And you no longer need this whole group of intermediaries in the middle, which then enables much faster settlement and a cheaper settlement as well.
Mm-hmm. So what might that look like for banks in the EU, for banks in France that have a lot of BNP? You know, there's a lot of tendrils in a lot of places, a lot of presence in Africa as well. What does that disintermediation do to the process and to the relationships, in your view, between these powers, these states, these nation states?
Sure. And
by the way, anybody can answer that question, by the way.
Okay, I can go with my opinion on this.
Sure.
I can compare that with what happened with international calls like 20 years ago. If I were here in France and I had to call Argentina, I would spend a lot of money per minute to talk with people in Argentina because my voice goes through private telecom companies, okay? Then later the internet was invented and voice over the internet was introduced. So we had a public transport network for voice, okay? You can see this Bitcoin technology as a public transport network of value, okay? So in the same way that transporting voice is stopped being a business for telecom companies like a long time ago, sending money is going to stop being a business for almost everybody, even banks or remittance companies, in my view, because this public value transport network is already here. It just needs to go massive. Once it's massive and everybody have it, absolutely nobody's going to use it, as nobody's using today international phone calls, at least with the rates that 20 years ago we had.
That's a great point. I want to just peg on the remittance issue. Has anybody here heard of BitPesa? Okay. Now, for the rest of you, you've heard of Western Union. I know that. And some other services that provide similar functionality. But, so BitPesa is created on the Bitcoin, specifically the Bitcoin rails. That is the path that Bitcoins take to get from one wallet to the other. And they are about to kill Western Union. Western Union actually has tried to now build a blockchain to fight off BitPesa. What they do is right now they're actually small because of regulatory issues. They're only in the UK. But they built the rail directly to Kenya using the M-Pesa backbone, and essentially for 3% can deliver money within 10 minutes, any amount of money basically, from the UK to Kenya. Now, once that happened, Western Union charges roughly 13 to up to 33% to transmit money for remittances, meaning someone working in the West sending money back to somewhere else so that their family can live.
But even that...
Well, hold on. The BitPesa program is 3%. Now, that math does itself, right? Am I right? That is a strong argument for what's going on in this space and how established companies are having to either adapt or eventually die, I would think. More so adapt, probably. But if they don't, they're in big trouble. So, Luis, I'm sorry, go on.
Yes, that even that is comparable to the first voice over IP companies.
You are saying voice and not boys, right? Okay, just checking.
How you say it? Voice?
I'm just checking. Voice, I'm just checking. I know it's the Argentinian, like,
Yeah.
V. Yeah, I know.
Okay, what I think is that that case is also comparable to the first voice over IP companies that start offering this as a service. But there will be a day, like today, when you have almost every social application that allows you to talk, that not even those companies are relevant anymore, you know? Mm-hmm. So we just need cryptocurrency on everybody's phone and forget about that business. It's not going to be a business anymore for anybody else. And that's it.
So I do have a counterpoint to the idea of that cryptocurrency or digital currency, that's the nicer way of saying it, digital currency.
Thank you, I appreciate it.
Is going to be 100% ubiquitous. And I think that this is a pretty interesting idea because I've got Bitcoins and I'd like that to happen because clearly they'd be worth a lot more if that happened. But I think that there is something to be said that having an inflationary currency where there is some semblance of control can compete with this sort of uncontrolled, decentralized digital currency. In the fact that what I think will likely happen is you'll have both of the services working in tandem. Everywhere, where you will have basically the governments that are able to work with currency better and use their tools for the public good, being able to compete with Bitcoin, whereas those countries where they are unable to control their currency in a good way, where it's completely corrupt, where all they're doing is printing money for their own gain, that's where you'll see cryptocurrency, digital currency taking hold and being in more people's lives.
So you're saying it'll expose those areas that are less than transparent and upfront about what they're doing.
Exactly.
Okay.
Yeah, there is going to be a competition because the choice is going to be on everybody's phone. You know, people is going to be able to choose between having Argentinian pesos or whatever Bitcoin or whatever is there by that, and there's not going to be only a competition between national digital currencies, but also between national currency already digitalized and any type of cryptocurrency that survives until then. Yeah.
Okay. So
I mean, you see that happen even in China, where you see it's hard to move actually the currency or to exchange the currency. I mean, Bitcoin is really famous there, and people are using it to actually transfer money abroad. So.
Yeah, absolutely. But stay here with me, Micha, because I want to ask you and Richard actually specifically, but anybody can chime in. What do you think, or how do you see France entering this game when it comes to regulation, when it comes to technology, when it comes to access, which is there, when it comes to all of the things that we're discussing right now? What do you think France's next move is, and where they need to be heading in this space?
Okay, so it's an interesting question for us. We're actually speaking with the regulators here in France, in Bercy, in the Treasury. So there's an initiative from Macron for a mini bond initiative. Yeah, and so this initiative is tied in with some exploration with blockchain, and to see if this can be. So basically, mini bonds like this bond de caisse, I guess is how you say it, bond de caisse. Yeah, so it's just. I'm not a financial expert, so I'm going to kind of vulgarize this as much as I can. But basically, it's like a way for like all these depositors to collect their money and then release it to a lenders to release their money to a borrower.
Okay,
so, it's kind of like
is it a micro lending?
It's used for crowd lending. Yeah.
Okay.
Yeah. Okay. Yeah. And so talking with the regulators, they're quite knowledgeable. They've been doing the research, been following the topics, and we can have a pretty good conversation about the technology. And at the same point, they're quite open. You know, we mentioned, well, great, the mini bone is going to be great on the blockchain but we still need to have some kind of like blockchain euro. And they're like, yes, we're very interested. What's the possibility there? You know, so they want to work with startups and fintech and do what they can. on this other side of that conversation, there is the practical aspects, which, yeah, it could take some time for this.
Well, that's what I wanted to get to with
you know?
Micha. I mean, Micha, do you see this as being just one turning point, some lightning strike like what happened with Firechat, that just, boom, it just changes everything right away? Or is this, from your experience as an entrepreneur who's had to plan and who's had to insert yourself into markets, as well as just, of course, we'll take some luck too, but, or is this more of a steady sort of insertion over time, or do you expect any of these lightning strikes to happen? For instance, should another recession of the depth of the last one happen, and I think it would have profound effects personally in emerging markets with digital currencies. But that being said, what's your view on that? Because in America, you're in Silicon Valley, you're also French, and you've also dealt with these markets. So what's your feeling on that?
First, I want to come back on what you were asking about France, and I mean, France has been innovating in payments, and probably the most innovative country when it comes to payments for many years. So probably today, I think blockchain and Bitcoin are very complex technologies. They are not coming from France, even if I'm sure some probably coders were involved from here, but. I think as soon as the technology becomes understood by more and more people, I'm sure France will embrace blockchain and Bitcoin.
I think that's happening.
And that's the proof. Right?
I think you're already there.
So I just want to mention that as far as Firechat lighting up, I would say strikes or.
Well, I didn't mean to say strike, even though it was a strike.
Big movements.
Yeah.
No, I mean, I think it's just a tool, and it's just. But what's interesting, it shows that with this kind of technology, powers come back to the people.
So what would you like to see?
And France historically is famous for that. So.
Liberté, égalité, fraternité. Yeah. Absolutely. I think we're actually entering into a new age of that. I think that pure capitalism is about to show its face, and it's a lot more equalizing than people think, as long as you have the access and as long as you have the assets that can be traded back and forth for value in different ways. So France is actually, weirdly enough, very suited from a conceptual standpoint to play big in this game. But go on.
No, I just wanted to comment on what you're saying about the financial crisis being a catalyst for this adoption. When you mentioned the Hong Kong story, it's quite interesting because, since I've been in Bitcoin, I've seen the Cyprus situation, sure. 2013, and then I saw the Chinese market kind of like jump into the Bitcoin, drive the pricing up to 1,000. And then we saw the stability for a few years with Bitcoin, and then now today with Venezuela and China capital control, stock market,
740,
Brexit, like all these like crazy things happening at one time. Here's the Bitcoin price starting to rise again. So I think there is quite a bit of proof that when there is the next significant financial crisis, we could see a major shift happen. It could be the catalyst.
I will tell you that most every central bank is speaking with only a few firms about putting their fiat on blockchains. I can tell you the Central Bank of England is certainly having that conversation. I mean, the Bank of England. Europe is having that conversation. Tanzania has already put their fiat on a blockchain. And that's really telling because Tanzania obviously is Africa gateway country. So it's, when those things start to happen, then I think that and I want to bring this back to France actually, this is what this day is about, the reach that the mobile companies have and the sort of engineering companies have here. And you're right, France has been in front of payments for a long time. This is a different technology, it comes from a different place, more distributed. So as a nation state, it's going to have to adjust, I think, like every other nation state will have to adjust to how to regulate themselves and how to also reach out to other countries. And Africa being, I think, one of the most, we talk about Africa a lot, not because we just love talking about Africa. Africa is a very serious part of this equation because Africa has a tendency to leapfrog everybody else. If you look at just the phone systems, well, Africa basically had very little phone systems, what we call in America plain old telephone service, POTS, POTS lines. They barely existed in most of the continent. So once cell phones, feature phones, hit the marketplace, now there's just about 100% penetration of feature phones in Africa. That's a lot of phones. And once connectivity becomes a little bit higher, a little bit more ubiquitous, and digital wallets, and these become, as I said earlier, cheaper, about sub $5 is the point where most experts say that, or 7 euro, when you get under that threshold, then pretty much every poor person on earth will have a smartphone. And that will allow them the access to these markets. So we're not trying to necessarily predict the future, but what we're saying is this is the future that's coming. This is something that's happening, whether anybody here likes it or not. All of these concepts of value, all of these concepts of lightning strikes, all this talk about regulation, it becomes very, very important in how we frame and we think about how they'll be used, and because they're going to be used. And sometimes you can't tell. Sometimes lightning strikes, and sometimes you can take a very methodical regulatory approach. So with that in mind, we're going to now open the panel up for questions and answers. So I encourage anyone who has a question to ask it. Can you do the microphone? Anybody have a question? I know, there we go, right there.
Thank you, Katia Hilal from Red Cloud. I like the parallel that you draw about with the voice over IP and how international voice calls now often go on voice over IP. But if you do this parallel, you know that WhatsApp has been bought by Facebook, Skype has been bought by Microsoft. So are we going to see big companies, internet companies, buying or controlling some of these cryptocurrencies that are going to be our assets for tomorrow?
Don't say cryptocurrencies.
Digital currencies.
Anyone want to take that? Who wants to take that?
Yeah, I think. Oh, go ahead.
Sorry. I think Luis used that metaphor to just explain that the same way internet disrupted communications with and enabled voice over IP, technologies like blockchain or bitcoins are going to disrupt the banking industry, insurance, and much more. The internet today, even if it starts to be trusted by some big groups for certain application of services, I mean, the internet is still open to everyone to access and to expand it. And I think more specifically in the case of blockchain and Bitcoin, I mean, it's the same. Unless we see a big entity owning more than 50% of all the mining nodes, which I hope won't happen, then in that case, I think, we can ask that question. But for now, I think it's pretty distributed and to avoid this kind of situation.
And there's two ways to look at this, right? I mean, one is the protocol itself going to be bought, right? Which is kind of like saying, is the internet going to be bought? Versus, are the companies that have become really popular leveraging this technology going to be bought, right? So it's not like you're buying Bitcoin, kind of like how you didn't buy the internet, right? You would be buying a company that's leveraging this technology for one reason or another, right? Maybe you have different veins where one company becomes really good at handling insurance contracts, and another company becomes really good at remittances, and they become like the main companies or one of like three main companies that do that particular section, kind of like how Skype and WhatsApp are like the main companies in these voice over IP scenarios. They could get bought, they might not, they might become companies of their own. For instance, right, Google and Facebook are also just different veins of companies that were built on the internet, right? They don't own the internet themselves, although I guess you could say that maybe Google and Facebook do own the internet. But regardless, these companies on their own sort of stand on their own. And I think that you're going to see the initial companies coming out in the space, either right now or in the next 5 years, becoming these behemoths who maybe later buy the second generation companies.
Luis?
Yes, I believe that there is more than one trend happening at the same time. One of these trends is the blockchain trend and its adoption in finance and other possible applications. But there is a broader trend that is about decentralization. That is where this Internet of People concept lives. There is a big trend towards decentralization, specifically in this concept where my phone connects to your phone and to everybody's phone without going through the web. Then that is going against what you're saying, and somehow, in the sense that companies start to be optional, okay, and the focus is put on people, because in most use cases you can run a system completely in my phone and in your phone, and we interconnect and do any type of business. For example, I can rent from you your apartment in an Airbnb-like application without going through Airbnb, and I can take a taxi without going through Uber. So that decentralization movement is somehow going to put the focus very much on people itself. So
Okay.
you have to keep it in mind.
I just want to add one.
Sure.
I just want to build on some of this. I think this discussion is really interesting in how it can lay out a future vision for what may happen. If you look at banks, I think they're a great example that we can quickly analyze. Maybe 2,000 years ago, banks certainly existed, and they existed as a storage for your gold or your silver coins or whatever it may be. And now you ask the question: why did people put their gold coins in a bank vault back then? Why was that the case? And perhaps it was more secure than their local home. Maybe they don't trust themselves storing this gold, so they trust the vault at the bank. And maybe they get a paper that they can use and trade that. So there's a couple of reasons why they may use that. When we look at banking today, it's much more complex. The banking is in between this like regulatory and somewhat technological, and then they're still kind of vaults in some sense, And so the banking industry is really a product of all of these forces.
Because there are several business models run at the same time.
Yeah.
I mean, when people say banks are going to be disrupted, they are just too generalizing, because what is going to be disrupted, what is not going to be a business is moving money internationally.
Yes.
That's not going to be, but all the other business models the bank runs are going to be a business, continue being a business. When I say that we are building an application that do what Uber does, doesn't mean that it's not going to be any business for any type of companies like this. What it means that the matching between the driver and the rider, the matching between somebody buying a service and somebody selling a service, that matching is not a business anymore, because it's done by the network itself. But there is room for companies to do insurance, for example, on apartment owners, or to do background checks on taxi drivers. So there is a lot of room for doing business, and that was what I was telling at the beginning, that this new space of decentralized application is a fertile land for doing business, because now these monopolies like Uber, Facebook, and all these have to unbundle their services, because some of these business models are not going to be viable anymore. So there is an opportunity for some smaller companies to take over and do whatever can continue being adding value to transactions.
Well, I'm going to tie this up by adding that, to answer your question just very specifically, there's going to be, like every other wave of technology, especially in the internet, there's going to be the wild, wild west, then there are going to be levels of consolidation, then there are going to be, big IPOs and sales and all of that great stuff. That's going to happen. But what Luis said, which I think was key, was that simultaneously, there's going to be an unleashing of bankless value that's going to touch people who don't have those accounts, who don't live in that same world of the structured sort of Western model. And we don't know what's going to happen. I'll be very honest with you. Nobody knows. It's never been done in human history. So we don't have a precedent. But I will say that at some point, when I go back to the French motto, right? Liberty, equality, brotherhood, meaning people getting together. Once you start having people creating their own lifestyles and not dependent or beholden to outsider banks, financial institutions, schemes, you're going to find a very different world. And maybe those IPOs don't even matter all that much. Maybe they do, maybe they don't. Don't know. Never happened before. Okay? But certainly we do know that a lot of value is going to be created. It's going to be just unleashed. And it'll be interesting to see. I don't think IPOs go away. I don't think market consolidation goes away. I think all those things are going to find a way to live together and form some sort of new conversation. But are there any more questions? Yes, please.
Yes, I'm Christian Berthe. I'm a specialist in the cash management, supply chain, and security. And you're talking about the digital currency. I was talking more in the past, the old world with the cash, meaning papers and coin. My question to you is, the Central Bank of Denmark has announced that they want to be the first country being a cashless society, trying to outpace Sweden. So with everything you've been mentioning this morning or this evening on the digital currency, how do you expect you to help them to go faster into a cashless society, and why those technology you're developing or bringing versus the credit card companies or the other means of cashless currencies, which are not the one you're referring to, and why are you going to overtake them, for example? Thank you.
Anybody? I'll answer it if you don't. So, Luis, I know you want to answer this because you want to answer
just one
everything.
Sentence. Yeah. The main difference you should visualize here is that this new technology brings, in comparison to the other, is that is a value that you can hold by yourself. Okay, when you put money in the bank, and in Argentina we have a lot of experience in that, it's not your money anymore. It's the bank's money, and it has a promise to give it back. Okay, but in Argentina we know that too often doesn't happen. So the thing is here, the main difference, and to say it clear, is that all this value in money like digital asset or whatever is something that you can hold by yourself, and that was not possible before.
It brings about an interesting concept about the Internet of Ideas as well. Because once you have this consensus-based, this distributed but consensus-based value from people all over the world, it's their ideas and what they bring to the table, what they bring to humanity, really, that will start to create new kinds of value. And that's, who knows? I mean, I don't know the answer to your question. But what I can say is that the tools are there to have these conversations. And so no matter what anyone tells you, this is all being built out now. There's nothing definitive happening in this space, except a very few things, like Coinbase. If you want to buy and sell Bitcoin, you can do that, or any other 1,000 currencies there are, most of which don't mean anything, but some of which mean everything in this space. Yeah. And what will be created. I mean, if you look at it just from its baseline, just the baseline of what community means, we are right now, this very second, a community of people who have different thoughts about the same subject, but are focused right this second on the same subject. That actually has a core value. It's a core value proposition in there. If we decided to, we could create value out of it, digitize that. And we'd have to come to some kind of consensus as to what that value means, what we want to do with it. But we could do it. And that's now being done all over the world with groups as small as this, or groups as large as nations, but not living in the same nations. So there's no hard answer to that. I wish I could give you a hard answer to it, and maybe in 5 years I will. Give me your card. I promise you, as soon as I have an answer, I'll let you know. And anybody else? I think we have a question over here. And then we're going to wrap it up, by the way, after this question. I think we're going a bit over time.
Good morning, Corinne Dubruel, Centrale Énergie. So the energy transition on a worldwide basis is based, as you know, on decentralized energies and big data and smart grids, smart buildings, ready to grid. And I would like to understand, could you elaborate on the interest of the blockchain technology for that energy sector? I understand that maybe for the big data governance, we can expect some interest in having the blockchain, to be a third part of a faithful third part for the big data governance.
I'm going to stop myself from stepping on this question and let some of these guys answer it first. So yeah, go for it.
So we're working at Stratum. We're working with a couple partners in the energy sector. The two use cases that we're looking at right now and we're helping to build infrastructure for are around, one, creating a type of energy credit token that can trace the source of power. So when a consumer purchases a good, it can actually say, okay, 3 of these credits were traced back to a green power source. And of course, having that as a universal, having it with universal traceability is an important aspect. So we should be able to fact check this at any point in time. So of course, the blockchain and being able to leverage this decentralized platform is very important in that aspect. The second one is involved, so in Brooklyn, apparently there's like a decentralized smart grid for,
Yeah. Yes.
So there's a project happening in France, in Lyon.
Yes.
Yeah. Yeah. So this is something that we hope to be a part of. Yeah. And we're in early talks with them, of course. So there's a lot that can happen. But yeah, we would love to help with this kind of project and help leverage some of these technologies. In addition to just the blockchain, there's also other types of systems that need to be built around it. There are workflows and processes involved.
Absolutely.
And identification and, tying all this together. So there's a lot of work to be done. And I think it answers the question earlier about I think it was Denmark being the first cashless society. I think there's a lot of infrastructure that still needs to happen before we can have a complete cashless society. And so as these systems come into place, the easier it will happen. So.
Okay, guys, let's give it a minute with anybody who wants to answer.
Yeah, sure. So this isn't directly for just the energy industry, but when you're looking at blockchain, right? I mentioned one thing that I thought that essentially is really hard to achieve, which is asset settlement. But there are 3 other attributes that are not as hard to achieve that you can do with public or private blockchains, and these are proof of authenticity, meaning you can always know exactly where the origin of this was, prove that there is legitimacy to the paperwork that you have. 2 is data notarization, which is knowing that something existed exactly as it was at a certain time. You can undeniably prove this. And 3 is data aggregation. Basically, everyone having the same data and everyone knowing that everyone else has that same data. And as a result, you reduce reconciliation costs, right? So when you're looking at blockchains, private or public, these are the 3 really big attributes that you should be thinking around, which is proof of authenticity, data notarization, and data aggregation when looking how can you apply it to your enterprise.
And just to close it, I'm going to add one more thing to that. They're both very correct in their assessment and their concepts. Identity is at the heart of it. Security is at the heart of it. Even in energy, and it may not seem that way, but Agentic Group consults with Europe's largest commercial port, and energy is at the heart, actually, and this port is actually forced to reimagine itself as an energy provider, and almost like a bank, to some degree, because they are now forced to say, okay, we can actually securitize these energy assets, we can build bonds. We can actually self-fund. We can do all kinds of different things that we could never think about doing before. We can involve the community in that process. We can take that secondary currency and finance innovation and startups. So like I said before, the entire conversation simply changes and it becomes much more broad. You do have to start somewhere. And I will tell you though, that at the heart of all of this is identity, even in energy. Because as an energy consumer, just knowing, who has what, making the meter smarter, having people engaged in the process of understanding these assets a bit better, you understanding those assets a bit better, me understanding them a little bit better, say, talking with someone like you, So energy is huge in this space. Energy is probably a multi-trillion-dollar play at this point, as far as we can see, and that's probably not very far at all. It's probably more than that. So that, I hope, answers your question. Okay, thank you, everyone. I really appreciate it, and this is for the audience. We're going to take a 15 to 20-minute break, probably a 15-minute break, and then come back with part 2. Thanks.